Good morning, everybody. It's Chris from Serene Education with the four majors in this update for the 21st of August 2013. Looking at the four majors this morning, starting with the euro against US dollar using the FX8 Ultimate template. Let's have a look and see what happened. Yesterday, beautiful bullish engulfing candle on the daily. Really, and that's what I was talking about. And this is what I mentioned we needed to see if the euro was still strong against US dollar. And this was a major resistance level. We needed to see this level being breached, and we needed to see a nice daily candle close higher. And that's what we got yesterday. So as long as price can maintain above 33.90 now we should be looking for potential entry points on this particular pair. And looking to the upside, we could look at the 50% retracement, the weekly retracement here as our first target. So anywhere between this resistance level, this new support now in the level, you're looking at a good 90 pips and change. So look for the pullback. I look for normal for a nice 4-hour candle close, and then I take the entry on the hourly. So looking for longs, intraday you can see the pullback happening now with a breakout. We should expect a pullback, and that pullback should maintain above the current prior resistance now, which would then form a new support, and then we could target the upside. And you can see the long-term sentiment very much in favor for this particular pair, making swing highs, so looking good. So the moment we drop into the 4-hour time frame, straight away we get an alert signal for a buying opportunity. And if I just bring it through, you can see yesterday's nice move to the upside, and then consolidation on the Asian session, and as we go into the European session open, we're seeing a slight pullback. But as long as it maintains above this 33.90 now, I'm happy, because then what I should be looking for is potential entry levels. The only downside is if we see a bearish engulfing candle close low on the daily, then we could potentially be looking at a tweezer top at a major support and resistance level, which is a no-no, which really indicates that we should be looking for negative sentiment. So look to see the 4-hour consolidating above here, a nice bullish engulfing candle, and that would go a long way to actually telling us that we should be looking for a healthy move to the upside, and then we can target that weekly highs here, roughly around the 13.48 and change mark. Sterling, here again, not as much movement as before yesterday. For euro against US dollar, still attempting the prior highs, consolidation highs, and we have seen price moving above the weekly fib level here, which is a good sign because it's broken above a major support and resistance level in the past, which is good. However, we've seen slight consolidation. It is moving upside, don't get me wrong, but very indecisively. You can see that quite clearly. Long-term upside movement, swing highs depicting upside movement, and recently a lot of strong momentum for sterling against the US dollar. You can see this very aggressive move to the upside. The most important thing here is price has actually found support above the institution. We've tested the institution a number of times this year, and each occasion we've failed. The fact that we've actually found support now and we've continued higher is a good sign for sterling against the US dollar. And as it maintains, as long as we spend more time above the institution moving average, then we should be looking to the upside. As it stands at the moment now, look for entries towards the prior highs here that we saw in early June at the 61.8 fib retracement on the weekly. So anything above 1570.90. So we're looking at potentially, from where price is trading right now to the level, a healthy 100 pips. So look for a nice entry level here, and then target these highs at the 61.8 mark. And yeah, looking for buying sentiment, a bit mixed on the shorter term time frames, a lot of indecision. MACD has dropped off, RMO is well above, but we're seeing as price moves higher into this weekly fib here, we're going to see MACD something to drop. That just tells you that price is consolidating as we head into these major highs. But looking for buying sentiment nonetheless as we maintain above the weekly fib here at the 50% line. So you can see a lot of consolidation now, not a lot of true sentiment candles as we hit above this. Ideally you would like to see a nice bullish engulfing 4-hour in my case, and then look to enter on that candle. At the moment, now consolidating, so we would like to see price now breaking the current highs. You can see price now trading within this consolidator range. No true sentiment coming out of it, and you can see that the highs are getting slower. So you can see price is actually tapering. It's actually being squeezed now to the upside, and a clear signal that price is now slowing down as we head into these weekly highs. As long as it maintains about 50%, perfect. Look to see if we get a nice bullish engulfing candle, and then we could target the upside. The only downside here we could pretty much see is a nice bearish engulfing candle, and then we could head back towards this 50% retracement on the weekly. But as it stands now, looking higher for price. Look to see if there's any news out there that's going to factor in price action today. We have public sector net borrowing first thing this morning at 9:30 a.m. GMT for sterling. So one to watch, very important. Then we've got the CBI industrial order expectations for sterling, which is also very important. So look at those two news announcements to see if there's anything likely that's going to push price. I presume it's pretty much consolidated at the moment until we actually get a heads up from this. And then this afternoon we have the FOMC meetings and existing home sales figures for the US market. Two very important news announcements for the US market. If those come out negative, it could push sterling higher. If those come out positive for the US, it could see a reversal on sterling against the US dollar. US dollar, Swiss franc, here again, after negativity on euro against US dollar, we saw US dollar Swiss franc moving lower. However, not really it breaking or going into these lows at the bottom, which is good. Nice bearish engulfing candle. It's now consolidated. For me, I still want a bit more from that. I was looking for ideally a more a stronger bearish engulfing candle. It's pretty much just sold into the price support and resistance levels here. It is below the weekly level, don't get me wrong, but we see a lot of consolidation at the underside of this weekly level there. So ideally, if we want to get a more confirmation, I'd like to see something that's more genuine. As long as it maintains below the weekly fib here, you can see it's trading below all the moving averages. So this is still very much negative long term. However, you can see intraday we're seeing a bit of positiveness on our smaller time frames, hence the reason why we're seeing this pullback. And this is coming at the low end over here of these consolidation lows. So RMO is still below zero, looking good. MACD up until recently was positive, and it's just gone negative yet again after yesterday's candle. So want to see further confirmation, get below that. And as I mentioned yesterday, we get below this consolidation area here. You can see that there's nothing here to impede price from falling very, very sharply. And we could get that. I mean, as I mentioned, we've got the FOMC meeting minutes later. We've got crude oil inventories this afternoon. We've got existing home sales figures for the US market. So there's a lot of important news out for the US market this afternoon. So that could be reflective on what happens to price going forward. So be patient here again. Like to see more of a confirmation candle, but as it stands at the moment now, look for negative sentiment to the downside. As long as she trades below the weekly fib here, then we should be looking for that obvious negativity. Swing lows depicts downside movement. She's not been making any higher highs recently, so that's all negative. So be patient and see what happens come this afternoon. Last pair of the day, US dollar Japanese yen. Here again, consolidative on the weekly fib retracement level above the institution moving average. So still in a negative consolidation pattern. You can quite clearly see we've been consolidative. Price has been making lower lows, which is an indication of negativity. But now we're trading into the weekly. You can see quite clearly over the past week in particular, price has been bouncing on this weekly fib. And we have the institution moving average below price. Last time we actually sold into that, we saw quite an aggressive bounce to the upside. So still positive in terms of the overall sentiment, but negative on the consolidation side. You can see the RMO is very much below. Our candlesticks are very much red. We have a blue candle, arrow, but the candlesticks are very much negative. MACD is above, and it's primarily because we're so consolidative. However, I don't like the fact that we're still making lower swings on the daily. That still doesn't bode well. If we are positive, then we want to see higher swings. So at the moment now, not trading US dollar Japanese primarily because it's consolidative. Over the past week or so, we haven't really seen it price moving anywhere very drastically. It's still above the weekly fib, which is still a positive sign, even though we are falling. So, and as long as the institution moving average is still trading below price, and there's always a potential for price to be bouncing soon, and we have seen that recently. So this to be negative long term, got to see the institution being broken and this price support and resistance level here on the institution being breached. So anything below 23.6. So you've got to get around these areas at 95.61 in order to look at the long-term sentiment here. The price support and resistance lows here on the monthly is targets. But as it stands at the moment now, consolidative on a fib retracement level. I'm just going to stand aside until we get a far better, clearer picture. So that's it for the four majors today, guys. If you are using this template, as I mentioned every single day, please back it up with sound money management rules. Got to have great money management rules. Those are going to be very, very, very. It's imperative that you trade with them. You can have the best strategy in the world, but if you don't have a great money management rule, it's worth nothing. Okay, if you are interested in this particular template and any of the other stuff that Serene Education does provide, please drop us an email at info@sereneeducation.com and we'll get back to you with further details. Other than that, keep it simple. Look at the news, see if there's anything out there that's going to factor in price action, price movement. If price has been moving or consolidating over a period of days, look to see if the news can actually give you that that breakout that we were expecting. That's what we want. We want to see where the market sentiment's moving or driving, and then once we indicate where the big boys are trading, then we can trade with them. We don't want to trade against them. We want to trade with them. We want to trade with market sentiment. So I've got to be patient. Other than that, I'm going to leave you to it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.